entering new frontiers and reinventing existing models. These innovators are pushing boundaries, thinking outside the box, and showing us that when it comes to innovation, sky's the limit.
Let's dive right into our amazing lineup. First up, we have Aman Singh, co-founder and CEO of GradRight. He's basically the financial superhero every student dreams of. He's found a way to make education funding as stress-free as finding Wi-Fi in the coffee shop.
Next, we have Pratyush Halen, Director and CEO of Fingpay. Pratyush is making waves in the fintech world, turning the chaos of payments into a smooth one-tap wonder. If only all of our lives' problems could be solved that easily.
Joining them is Sanjeev Chandak, founder and CEO of FTCash. Sanjeev is the guy who is making it possible for small businesses to level up their game and step up into the digital age without breaking a sweat.
Also, on our panel is Bhuvan Rustagi, co-founder and COO of Annum Lendbox. In the world of peer-to-peer lending, Bhuvan is like a matchmaker for money, bringing borrowers and lenders together faster than a dating app can set you up for your next date.
And last but certainly not the least, we have Meenakshi Singh, CTO and CMO of Laiqa. She is the true embodiment of resilience and strength. If anyone knows how to turn setbacks into comebacks, it's our one and only Meenakshi.
Meera, guess who is moderating this fantastic panel?
Who's that?
It's Aashish Vanigota, principal at IvyCap Ventures, someone who is a master of strategies, whether it's about convincing people for anything or winning a mafia game night. He knows all the right moves. He's called a gamer, player, and what not by his colleagues. So panelists, be careful of him. He might just get you agreeing to things you didn't even realize you signed up for. And saying this from my personal experience. Over to you, Vani. Please come on the stage. And sorry for breaking all your secrets.
Big round of applause, everyone, for the panelists.
Well, I didn't expect that introduction. But what a start to IvyCap Day, right? I think it's been power-packed. Thanks for being really patient. I think fintech panel just after governance panel. It's quite a timing, right? And I see some of the giggles out there. We've got a very diverse background, which is there on our panel. And we've seen how fintech has grown, right? It is something which is right there. We've seen unprecedented growth. We've seen across segments, themes, how things have evolved. I think really the first wave of fintech has gone by, and we've seen building of, you could say Zerodha, we could say Pine Labs, we could say so many of other guys who've built it really well. And at the essence, I think we've been through innovators, right? I mean, UPI across the globe, everybody started really using it, and that's where we stand for. Before we really deep dive into the panel, I would like each of you guys to just give a short introduction about yourselves so that everybody knows what you guys are building. And maybe just keep it quick, probably a minute or so, and let's deep dive. Aman, if you want to.
Hi, good afternoon to all of you. It's very nice to be here again. And I want to thank the IvyCap team for organizing this fabulous event for all of us. I have been broadly in the higher education space over the last, I would say, 20 years. The more significant and relevant part of that experience was setting up of Ashoka University. So I was the founding project director of the university, and I set it up over 7 years. And then I helped the setup of 4 other universities in India and a couple of colleges, which gave me an understanding of the challenges in this sector, whether it relates to students and parents trying to figure out the right college for themselves, or universities trying to build a brand and enroll the right students, or banks trying to fund students going to certain colleges. And that led to the creation of GradRight. We are a 4-year-old organization now. We have been able to aggregate the demand of student loans for study abroad in a very significant way. We have helped process close to $3 billion worth of loan requests and enabled students from tier 2 and tier 3 towns to find the right college and find the right money for that college. That's a little bit about us. Happy to kind of join this conversation and share more about what we do as we move forward.
Thanks everyone. I am Pratyush Halen. I am founder of Fingpay. I started my journey in 2016. The idea was to enable the end mile customers in the rural, semi-urban areas to be able to get access to financial services, digital payments. So that was the mission or vision for us to start Fingpay. My background was I was working in another company and developing payment solutions for African markets, and that's when it fueled that why not do it for India. And we have been successfully able to reach out to more than 10 crore users at the last mile, enabling them to access digital banking, digital payments, financial services for themselves. Like people like us in urban areas, we are spoiled with choices in terms of payments, in terms of getting access to financial services. But in rural areas, those things are difficult. So we solved those problems using technology and made that last mile reach successfully. So that's what we have been doing, broadly enabling digital payments as a payment aggregation and banking services.
Good afternoon. My name is Sanjeev Chandak. I am the co-founder of FTCash. So in India, right, I mean, I was really surprised that even in urban markets, there are a lot of MSMEs or let's say micro businesses who don't have access to credit. So despite the plethora of banks and I think about 20,000 NBFCs, I mean, the credit gap is a few $100 billion. So we basically enable working capital loans and supply chain financing to small or actually micro businesses. So your local mom and pop retailers, and pretty much we are in the urban market, so metros, tier 1s, tier 2s, etc. And we enable lending or access to credit to them along with digital payments. We are also licensed by RBI, so with both NBFC and payment aggregator license.
Hi, I'm Meenakshi, CTO at Laiqa. We're building a femtech application where we profile women's hormonal cycle, and we're building ML models to kind of put women in different hormonal profiles and then accordingly build solutions that help them regulate that hormonal health, right? Because I think the stats for hormonal imbalance related chronic illnesses among women is being pegged anywhere from between 20% to 50% of all females, which is huge, right? And there is very little research that has gone into at least comparatively, right? Very little research that has gone into women health specifically. So that's why we are building.
Hi, good afternoon everyone. My name is Bhuvan Rustagi. I am the co-founder of Lendbox and Annum. We started in 2015 as a generic P2P lending company, but graduated into more of a alternate investment platform. And what we are building now is basically a platform to bring institutional grade products for the retail investor. We manage around 3,000 crores as of date and have around 500,000 active investors and around 1.5 million registered investors on the platform, and really happy to be here. Also happy to see a non-fintech founder on this panel to bring a new angle. And thank you so much for having me.
No, thanks a lot. Thanks for that introduction. Clearly a very diverse panel. So Pratyush, I'm going to start with you. And I'm trying to tap into the digital payments. You've been building it for the last 8 years now, and you've seen how it has evolved. And we also see how the policies are changing at the same time, the technology is enabling it, right? How do you see this evolving now from where we are? Do you see some disruption? Do you see status as quo? What are your views?
See, from a payments angle, we are seeing the disruption, constantly UPI. Recently, UPI Circle was launched, which is, delegate payments. So that disruption is constant and happening in urban areas. And what we are actually doing is bringing that kind of disruption in rural areas also. So like we were the first one to launch a biometric-based payment solution for the rural markets, because we thought they're very comfortable with biometrics. And then we were the first one to launch the NPCI product, which was IVR-based payments. So on an IVR call, people can make a payments from their bank accounts. So that disruption is inevitable, constant, to bring in, more and more users into the digital payments bandwagon. And the changing policies are also inevitable because they are actually aligning with the goal of the government or the nation. And if you are in sync with that, so that policies helps you rather than disrupts you. So like financial inclusion is one of the very critical aim for the government. And if you are aligning with that, so the policies which get changing constantly, it actually helps you in a way. So it doesn't disrupt you at all. So that's what, we have seen. And in terms of different innovations, like now we are trying something on more of a voice-based authentication, which we are experimenting. Face authentication, we are experimenting. So all those things we are trying to do for the rural market so that the payment systems become more accessible, simple, and more secure for their end mile customers.
Absolutely. The only way out is to innovate.
Absolutely.
Great. Now, the other segment I would like to go is and move towards Sanjeev. Sanjeev, you've been lending to MSME for a while, and it's quite dynamic at the same time. If you look at it at a global stage, we continue to be very underpenetrated, right? And there's a lot of credit gap to be filled in. How do you really look at the whole secured and unsecured lending at the same time ensuring that governance is at place, right? And how do you tackle this on a day-to-day basis?
So I think, this is a fairly regulated area, right? Lending. As you've been reading in the newspaper, right, over the last couple of years, the regulator has been looking at it very sharply in terms of what can be done and what cannot be done. So obviously, in the both unsecured and secured markets, right, I think our sense is that if you are complying with the intent, may not be the letter, but let's say if you're going to comply with the intent of the law, then I think it makes sense, or the regulations, then the business model makes sense and is primed for, let's say, for the future. But anytime what we have seen is that if folks play in the gray area, then if RBI comes looking, then there is a problem from that perspective in the future. So I think that is extremely important to figure out what the intent is and how do we get our business models to work with that intent, right? Obviously, there are a lot of challenges, right? So RBI is consumer friendly, but when you are lending, either secured or unsecured, right, you have to collect back, right? So how do you make sure that you are complying to the regulations while also making sure that you are collecting back on the loan? So I think that is important.
In a way, it plays like a catalyst effect, doesn't it? You have to ensure that RBI is your catalyst effect. Yeah. You have to be along with them. Changing a track a little bit, Aman, I'm going to come to you. And, you've been building in a space which is quite interesting, right? And which has seen a lot of tech disruption. We continues to see a lot of that. We've seen blockchain and AI coming into it. How do you see that role in your business? And do you see that enabling it? Do you see that disrupting it at the same time?
You could imagine us as a 3-stakeholder platform, student, universities, and banks. And anything that we do for any one stakeholder actually benefits the other two. So let's imagine financing on our platform. Students from small and big towns in India seek loans. These are high ticket sizes loans, 40 lakhs, 60 lakhs. And banks in general have been hyper conservative in lending to students who come from, let's say, tier 2, tier 3 towns with very low value collaterals. Maybe they are not going to a Harvard or Stanford. And so their risk view of a student is, in fact, debilitating to the sector. So for every student that gets approved loans, there are 5 who don't, maybe more. So we are beginning to use rich data on the platform. And just to give you a sense of the data, over the last 3.5 years of active operations, we've collected upwards of a few billion-dollar data points on students, universities, and banks, and their behavior with each other. Now we are in a position to predict fairly accurately on whether this student is truly fundable or what could be the right price to fund this student. So creditworthiness in that sense. And we are beginning to unlock the sector in terms of how much it can fund at what cost for the banks. But as more students start getting more loans, we also see universities getting smarter, which means now their financial aid can be deployed better. Earlier, they used to be blind about who to give waivers to. Now we can tell them, listen, this kid can get the loan, so don't sweat about the waiver, put your money to someone else. So I think this is just an example of how building basic predictive models for students' creditworthiness starts unlocking value for all three. It has started saving money for banks because we have improved their approval rates. So if earlier they used to process 100 students to give 20 loans, now they can just process 50 students and give 20 loans because we are giving them the right kind of students. We are beginning to improve the approval rates or admission rates from universities. Now instead of processing 1,000 applications to give 200 admit offers, they need to only process 500 applications to give, let's say, 100 admit offers. So I think there is efficiency that can be unlocked once you have rich data on all these three stakeholders. Financing is a big one for us, and if I imagine, let's say, the next 1 to 2 years, it will be so nice if we can move all the banks to focusing on the student merit alone and not looking at their family's financial background, because that is the ultimate way to shortchange a student potential. You're penalizing him or her for the background their family has. And we hope to really, if possible, completely fix that and make a more student-centric credit rating than a family-centric creditworthiness. I don't know if I answered your question, but I hope it makes sense.
No, definitely. Only if you were trying to solve this problem way in 2000s, it would be one consumer added to your profile.
Sure. No, thank you for saying that.
No, that's helpful. Bhuvan, coming to you, I think you've spent time in building P2P, and then you've also recently added per annum, right? And now trying to build something in investment space. Practically, if you look at it, the space is at infinite angle right now, how Indian ecosystem is evolving. How do you see the wealth tech evolving, and considering there's so many people coming into it, what really do you think will work out? And because in a way, it's a new frontier for you. How do you want to solve for it?
So yeah, I mean, you're right when it comes that it's an extremely large space and extremely new as well, especially in India or globally as well. We particularly focus on the Indian retail investor. By retail, I mean people who can come in with smaller ticket sizes and who are not really exposed to multiple avenues of investment and maybe are just graduating from your traditional FDs and PPFs and now are understanding. So one of the few trends which we have seen is that people are becoming more and more aware of diversification. People beyond mutual funds and beyond your FDs, PPFs and your age-old traditional instruments, now people want to understand that what else can they put their money in which can give them fixed returns or stable returns Uh, we are seeing a lot of adoption of online transacting. Not necessarily everyone doesn't necessarily now want somebody to call them and speak to them. They're happy to experiment online with smaller amounts, and then once they gain confidence, then obviously build a larger corpus. That's one trend. Obviously, another trend is that the regulators are catching up as well on a day-to-day basis because it's such a new space, even not just for the consumer, but even for the regulator. And so on a day-to-day basis, either RBI or SEBI are coming up with new and new guidelines. Like, for example, in bonds, SEBI finally said that for retail investor also there should be liquidity, which was not there before, to make it more attractive. So that means they are also uh, aligned to the fact that retail investors should participate in bonds as well. As they've also reduced the ticket size to 10,000 rupees where it was 1 lakh before, and even before that it was 10 lakh rupees. So small things which are definitely adding value and making this space more and more attractive. To your question, where a lot of people are entering into this space, I think that's not really an issue as of now. I don't really have a clear answer as to what exactly will work. The reason is because the only thing which will work is trust. You and consistency. You should be able to, in a consistent manner, give good quality products to the retail investor, because you must also understand that people in this room maybe understand risk much better than the person out there, a cab driver or maybe somebody who should be targeted. India has a volume and a volume business. So if you can build trust very quickly, give consistent returns and a good quality product, that is the only thing which will work. People don't want to understand आप पीछे क्या कर रहे हो, what the asset is beyond the point. People don't want to and don't have the knowledge to understand. So as long as you can give a good quality product and consistent returns, that is the only thing which will work.
Alright, so basically, if you're trying to beat Sensex, might as well go to Bhuvan and invest through per annum. Meenakshi, coming to you, I think you're trying to build very different from what everybody is trying to do, right? And specifically in health and wellness, we've seen it's quite still very underpenetrated, right? And there's an angle of insurance altogether. How do you see that shaping? Because health insurance has been, I mean, it's been an elephant in the room for a while, and everybody's talking about it, trying to solve for it, solve to some extent. But how do you kind of marry both the things and see this shaping up in the future?
Right. So the way we were talking about it, finance is an enabler for a lot of industries, right? For us specifically, obviously there is demand for health insurance, and that demand is coming from the fact that the cost for consultations and diagnostics is increasing. And anyway, like 60% of all the healthcare cost is in OPDs, right? Not for hospitalizations. And hospitalizations have been the core area of focus for a lot of insurance instruments. And we see a lot of action in OPD space now. Although it's still it's still very costly and not as prominent as the hospitalization angle. But yeah, they certainly demand, after COVID, that kind of revealed the weaknesses of hospitalization related insurance instruments, right? So we're seeing that shift. I think around 40 odd percent of 40 odd percent of OPD OPD insurance is being claimed by people in age group 25 to 45, right? Which means this is really what you would expect, because this is really the age group where hospitalizations are maybe only for, you got in an accident or whatever, right? But not for, illnesses as such. So I think this is one key area that needs to develop. And so this was all from demand side, right? From a supply perspective, how do you even make this affordable, more available, right? And that is where a lot of liberalization and availability of financial derivatives comes into picture, right? So for example, there was a study where they said that derivatives on interest rate, right? Interest rate swaps and caps, floors, they kind of are used by large hospital systems, not in India, in the US, to help them hedge their risk against the insurance or the loans that they provide, right? And this practice is kind of nascent in India. I think, I don't think we see a lot of hospitals doing this, but again, that's another trend that could pick up, right? Making OPD insurance and insurance for chronic illnesses more available.
Absolutely, I think long way to go here. Aman, coming to you, right? And you spoke about how students are going outside India to study, and that's increasing at unprecedented pace, right? Expected to be like 3-4 lakhs students every year now, and probably more than that, right? So there are a lot of players involved in your ecosystem, right? Student, lenders, universities. How do you ensure that all of these ecosystem players are on the same page? Because the bank interest rates are high, student can't afford it. Of course, you said about the family background, etc. But ensuring that all of them are at the same page on the platform, how do you enable that, and how do you think it is going to evolve?
I think we are really created out of a vision to build transparency in the sector. I think half the disadvantage that all these three stakeholders have is because they do not have access to good data or good insights. So today, if a student walks to a counselor, I would say the primary reason is that he or she does not know how to look for the right information for that university and how to organize that information to take a good decision. Banks do not have insights on the historical trends and performances of students from various socio-economic, academic, and geographic segments to be able to make a fairly accurate prediction of who they should fund and not fund. So it all starts with data and insights. I think we are taking the data-first approach. We are taking a transparent platform approach. There is every transaction that happens between any two stakeholders in some form, either as intelligent insights or actually usable, actionable information, is made available to other relevant participants within that system. I think our premise is, so long you can break down the asymmetry of access to information, all stakeholders will start benefiting. I feel the suite of applications, like on our platform, which at a brand level it is called GradRight, we have a suite of applications that are called Fund Right, Lend Right, Admit Right, Insure Right, Service Right, Partner Right, for each stakeholder, including counselors and agents, to actually see how the financing of their student is progressing on the lender side. We are helping universities see how the financing journey of a student is progressing on the platform, and banks to see which students are opting for what kind of universities so that they can customize products. I feel you can see us as an ecosystem of applications riding on data and intelligence that enables this, what you could call as being on the same page at all times, if that's what you were trying to get to. And then if you combine those data points, you're looking at billions of scenarios. And now the next wave of product that we hope to launch this month later is our first attempt at, I would say, solid AI work on the platform. We have billions of data points on one side, student responses, university responses, bank responses on the other side. And as a student starts looking for the right colleges and financing on the platform, now my tool can use my data and the widely available data on the web to generate recommendations. I think we have a long way to go, but I think ML and AI holds the key to this sector. at least in building a bit of a transparent ecosystem and ensuring that nobody is getting shortchanged in that sense. Yeah.
Got it. Got it. Sanjeev, I'll come to you, and I think we've seen the last 10 years in fintech, we've seen exponential growth. There's fin and there's tech. We've actually seen some of the companies not really building the fin, right? And unfortunately, profitability has been a concern, right? How do you see that, right? And you've been profitable, you've sustainably growing, right? How do you marry the concept of sustainability, sustainability slash profitability and the growth while you're also handling RBI and the governance part of it, right?
Yeah, I think obviously, no, I mean, in finance, right, what we see, especially lending, once you have given the money out, a lot of things are no longer in your control, right? So for example, when COVID happened, right, a lot of things, I mean, customers just refused to pay because of the financial or worsening financial situation, right? So the way we look at profitability is that, no, I mean, obviously, no, the unit economics have to work in the base case scenario, right? That is a little bit easier part. That no, it works when everything is fine. But we also make sure that the unit economics work in a stress scenario where if, let's say, things don't go according to plan because of the environment, then are you profitable or are you not profitable, right? So I think that has really helped us at FTCash to have very strong, high margin unit economics to that. The other thing that I think especially in finance, right? I mean, you don't have control over the entire value chain. For example, if you're doing payments, you have to work with banks at the back end, and then, I mean, they have a price that you most likely don't have control, or at least, let's say, have limited control. If you're lending, you have to raise debt to lend. Obviously, that is also not completely under your control in terms of pricing and renewals and all of that. So I think making sure that there is enough buffer, there is enough flex in the pricing of those points, and still you are making your positive unit economics. I think that really helps us, or at least will help in terms of staying profitable and also being sustainable from that perspective.
Got it. So, Pratyush, I'll come to you. And you've built a business in rural, right? And rural is not easy. Everybody knows that. At the same time, you have to innovate on a regular basis, right? So at the same time, you have to innovate at the regular basis. So how do you see that emerging now, right? Because at the same time, you've recently launched a new product which you're trying to tap into other segments. It's a new frontier for you altogether, right? So how do you marry these two things at the same time, building a new product, ensuring that rural grows at the same time? Do you see newer business models evolving in the rural also?
See, when we are there into the one product, we get to see more challenges, or how we can bring more people on that product, or what challenges are they facing, and then try to solve, and that's what bring in new innovation. It's not something like we go all together very different way. Like give you an example, like we were doing biometric based authentications for payments. So we were initially doing it with biometric, the fingerprints. But lately then we also launched face-based authentication, because for a fingerprint we need an additional dongle, which is a cost, and at the rural to make that available and working with a phone. But a camera is there in every smartphone. So that same camera can be used for authentication purpose. So that kind of innovation we are, building on the top of it, that how we bring in more people on that. And there are two things. One is the other part is on the latent side also. We try to understand, because not everything people express that these are their challenges, but there may be some other challenges which is a latent challenge which people don't speak about, but you have to understand. So our team, we ourselves go on the ground when these payments and collections happen and see how is it happening, and then try and understand what are those challenges. Like one challenge if I talk about, when we enable digital payments for the end mile customers to make their EMI repayments on our application, One challenge was they don't have money in their bank account. That was a very big challenge. And then if the companies force them to make a digital payment, they have to travel altogether very far to a bank branch to deposit that money into their bank account and then come back to make a digital payment. So that made us entered into a banking correspondent business also, where we created those Kirana stores to accept money to cash deposit into their bank accounts, and then they can make a digital payment into the customer account. So those kinds of challenges when you see on the ground, that helps you innovate, that helps you think over it. And you understand, like nobody told us ki, we can't deposit money, bank branch is too far. But it was understood that that's the problem which we are, because unka dehadi milta hai. So ek din ka dehadi chhod ke, they have to go there and do all that activities. So when it is happening at a Kirana store, it is happening till 9 p.m. in the night. So it's convenient for them. So that's how we have bought in innovation. That's what keeps us in the game.
Got it. Sticking to the ground and focusing on execution. So and to an extension to that, coming to you, Bhuvan, I think on the fintech front, people have spent a lot of money on acquiring customers. The CACs have gone up, right? How do you really see that from a GTM point of view, right? It's very easy to go on, social media and acquire customers, right? So how do you see the GTM evolving?
So, that's definitely not a sustainable approach. So profitability should be a focus of any business. We have also made sure that we are profitable at least for the past 2 years now. So go-to-market cannot be where you just spend money to get a user, because in the fintech business, or in our case, the wealth tech business, what's making you money is not just the first investment, but repeat transactions. Like the first time can be a 1,000 rupee or maybe a 10,000 rupee. But if the guy is not reinvesting with you again or adding to your assets under management, then you've completely wasted that cost of acquisition. And I think that is where companies should focus on, is not, and that's where the trend should go, is not just customer acquisition, but customer retention. Because once you've acquired a user, you need to make sure that you keep his money and make him add more money. Because you might spend a bit more on the first transaction, but you should not have to spend on the repeat transactions. And that's where you derive more value, I feel. And so in our case, for example, we retain around 86% people even after a year, where they keep pumping in more and more money. And that is why we are profitable. And I think that is something we need to focus on. So basically, if you're not adding value to the user's journey, or actually creating wealth for them, in our case or in any other business, then I think you can keep spending on customer acquisition. But if you don't have repeat customers, then you will not be able to sustain.
No, absolutely. I think sustainability is the key. I think we are short of time. We could probably go on for hours because the topic is so interesting.
And when you are moderating.
No, thanks a lot. I think thanks a lot, guys, for sharing all your thoughts. It was really insightful. I'm sure everybody enjoyed it.
Thank you. Thank you, everyone. What an exciting journey through the world of innovation.